evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for August 3rd, Tuesday, 2021, about 5:45 in the evening. Now, before I even get into everything, tomorrow, August 4th, we hold our live webinar. You're welcome to bring all your SPDR, ETF, stock market questions in. In order to get into the webinar, it needs your user ID and password. Click this icon you see up here. If you haven't received my invite yet, click that, register. You can always come back and watch this. Very simple to do. And you'll notice when you get confirmation of your seat that there's a sentence in there that I wrote to write me the questions. All you got to do is click on my email link, fill in what you want me to do. It comes right to me, and I'll be able to have everything ready. I open up the webinar at 12:15. I begin sharply at 12:30, and I always end by within 20 minutes, if not sooner, okay? I do not post this anywhere, so if you don't make it, you don't see it. And it's a pretty interesting time to be in the markets. COVID, that's what we're dealing with. You know that. Then we've got infrastructure bills, but you know nothing's going to happen on infrastructure for a long time. Congress, specifically the House, no matter what the Senate does, they're going on vacation August 9th for 5 weeks. So into September, I don't know what happens with the budget. I don't happen to know what happens with the second bill. And there's going to be a lot of political fighting. You're just at the beginning of this spectacle. That doesn't mean that the market's not seeing and very curious to see if it can get through the Senate to see how much support it has going forward. So that is just something that we look at, we see how this is all going to play out, and we take it from there. So let's take a look at the next phase of things that I have for you. We look today at, unfortunately, Governor Cuomo, President Biden wants him to resign. We'll see what goes there. It has nothing to do with the financial markets, but the president was asked the question. The president's trying to talk about moratoriums on evictions. We'll see. I think there's some things that can be done, and I do think the White House blew it. I think they had plenty of time to get in front of that if that's what they wanted to do. From the landlord point of view, if you don't give me my money, why am I getting the pressure? If the states have the money, get them to release it. Otherwise, let me do an eviction. I get it. So let's go to the market. ARK. Do you see what's just going on? This is it. Watch my hand. We're in a wave. It's not going up. It's not going down at this point. The chart action is doing the same. You have a pattern of a higher high and a lower low. You have no trend. Next, what's the market caught in? These are the moving averages. The red is the 18-day. The 100-day is in green, and this gray line right through here is the 200. Tell me you're not caught in there. As we were pulling back, I said that. I said this is a real support area. Now, if it gives ground, and it hasn't yet, maybe you're going back here. If it can pop above it, maybe that's the breakout number for the market. We don't know yet. We're waiting to see. I can tell you that if the market can get up through today's high and close over 120.73, you have the makings then of higher lows, and you already have a higher high. It would switch the chart. That's the what if. When I look at where the Bollinger Bands are, if that occurs, the objective would be 125.72. If you slip through the 118.35 by much, the potential is back to the 115.74. Is momentum helping at all? Well, the market, yeah, it's helping get it where it's at and hold, but it's wasting a lot of power. It's already at 67.67. If it goes much higher, any reading over 70, the way that I teach to use this indicator is overbought, in my opinion. And once you're overbought, you're not looking to put on, it's a filter. It's saying, hey, until you embed or correct that, you don't want to do too much. That's what I'm faced with. In Apple threw out a new signal. Now let's remove today. This is what Apple looked like coming into today. You had higher lows and a higher high, but it refused to settle over the 18-day average. So what the market did is it reversed course with an outside day up. I think that will attract buyers now on pullbacks to the 18-day average with stops under 145.18. Why? When you have an outside day up, if you take out the low of that day, often, I cannot use the word always, because in charting nothing has to always occur, but there's a high probability the market makes a run for the closest of a moving average under it or a Bollinger Band. Well, the averages are far away. So in my work, that would be the 142.97. I don't see the 200-day average on this. I should have that on here too. I will get it on now that I see that it's missing a few of these. Well, here it is. Some of them you got to get all the way down on the chart or up to get it. In PAVE, I told you I thought we'd run into serious resistance at the upper Bollinger Band. The trend had been up. We were looking for some type of verdict on PAVE. That's all I can say. In the Senate, we got one that was positive in the sense they moved to another phase. Now, it hasn't passed. It's not out of the Senate. We have a 2,700-page document. I don't know who's going to read it. I think it's going to be interpreted for most of the members in the Senate, and they'll decide to vote on it. Mr. Schumer says that he would like a vote to happen by Thursday. Well, if he's counting on that vote, you don't want to be bearish going into it, but you might want to say after it gets through, okay, that's over, buy the rumor, sell the fact. I'm warning you, that could be the mentality. What else is going on in this chart, though? Let's go back and count together. You don't have both numbers over 80 here. Or you do. That's the first day. That was July 28th. The next day you're over 80, the next. When you have 3 days in a row over 80, the chart is converted from being overbought to locking in momentum. I call that embedded. It's built into it now. And breaks in the market are often going to be met with buying from traders waiting to come in until that red line closes under 79. That's exactly where I think you're at. So I think breaks like today are where the traders are buying the markets, looking for the upper Bollinger Band. There's a key moving average that I use that I don't show in this particular videos. This set's free. My paid subscribers see it, and so do the people that take my courses. The higher high, lower low, you see that right here. Okay, did we ever embed? So if we come back on this chart, both numbers over 80, both over 80. So day 1, 2, 3, you're fully embedded. If you lose an embedding, you have to close under the number 79 in the red to lose it. You lost it. That's why I'm showing this. If it regains it, it can only regain it the next business day if both numbers get back over 80, which it did. So it becomes what I call game on. The traders are now looking to buy the breaks after today, and they'll throw in the towel if you get another reading under 79 with the target 104.76. I think you'd agree with me. This is a very much sideways action market. The question is this a base or a top longer term? In the semiconductors, this is a heck of a vertical run. I said that yesterday. I said, I think that this is just, I don't know how to catch a move like that. Straight up, I can tell you, higher to lower Bollinger Bands. I think the pros came out here if they were short. If they were long, and I don't know why they'd have been long, but if they were long, I think they got out at the upper Bollinger Band yesterday, and you're still overbought. POTX is still bearish, but I don't think you're attracting selling. You're too oversold. If you don't embed and you have readings under 30, I teach that that doesn't attract new selling. And I'll stay with what I teach. In ESGU, so now we're looking at a market that all it did is you had a downtrend over the 18-day average. Bias up, you pulled back to it. We have an embedded reading. I think the traders were buying this on the way down, and I think they're looking for 102.11. I think they'll be out of their long positions on the first read under 79, and if they get out of the Bollinger Band, I don't think they'll get out of all of it. They'll peel positions off. In the energy sector, no trend. Higher high, lower low, momentum up, the market trying to, and it did close back over the 18-day average. I don't know how you make heads or tails out of something like that. I'd leave that alone. The emerging markets, they have definitely caught traders' ideas. Why not? You've got worldwide bullishness in stock markets. The COVID situation, as bad as it is, everybody's looking now for what? The peak of it. Yeah, you heard what I said, the peak of it. You're going to go through that 30% in America of the people, some percentage are going to get the COVID, not everybody. Other people that have the vaccine get it, but they don't get real sick. So we're looking for the peak of this part. And when you're doing that, the psychology shifts. Where can I go in? I can't make any money on interest rates, so they're back into that market. You see the uptrend. We could embed. You have both numbers over 80 today. You had both numbers over 80 yesterday, but the day before not. Tomorrow's the day, the third day, that if it embeds, then the buy programs will kick in on Thursday, if that occurs. In the gold market, we have a pattern of a lower low, higher high, caught in sideways action. And I think you'd agree, gold has been very unexciting and disappointing. Why? The government wants to see inflation. Interest rates are near zero. The dollar's fallen recently, and you're not moving at all in it. Just not the place to be. The gold miners are stronger than gold. Higher lows, higher highs, but very overbought. And key resistance. Look at the combination of the Bollinger Band, the 100-day average, 200-day average. As a chartist, I don't know what event would move the market through all that at this point in time. TLT. There's no interest rate to speak of. We're at 117 or so tonight in the 10-year note. When you count inflation, you're backwards. Interesting. Higher lows, higher highs. The market is still flooding itself. Why? Fear. Where to put money. While in America we're in pretty good shape, and in the UK, they're in good shape. They're not in real good shape in other parts of Europe. They're certainly not in good shape in China. You see that, I hope. They've had major outbreaks right now. Their way of dealing with it, they'll just clamp down the whole society, wherever it is, and that's what they can do. Try to do that in America, it won't work. Yet with all that, they've got a big resurgence. FXE. Just hanging here, sideways action, not much you can really do. So you put it together, you try to come up with a game plan, and one of the most important happens to be working with these embedded slow stochastic readings. Look at this. Welcome, I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.